Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Happy Monday. Hope you all had a great weekend. Welcome to Pre-Market Prep. Look, we're all back together. Spencer Israel, Joel Elconin, even Dennis is here this morning. Good morning, everyone. Let's get right to it. We got a lot to get to. Earnings, of course. We are still in earnings season. About 105 earnings reports today, about 300 tomorrow, about 300, almost 400 on Wednesday, 450 or so on Thursday. So it's going to be a big week on the earnings front. We have the very rare Sunday earnings report with Square, which they reported because the news of the big M&A deal broke over the weekend. So we'll talk about Square this morning. We'll talk about the Chinese EV names, Li, NIO, Xpeng, all reporting deliveries for July, all good numbers. GE is over $100. We'll talk about that as well. It's not what you think. Well, maybe it is what you think if you knew about the reverse split. Anyway, Tim Quast is our guest at 8:35. He joins us every Monday for Market Structure Mondays, and Matt Hammond from IPO Warriors will preview the week in IPOs at 9 o'clock. Joel, good morning. We missed you. Hope you had fun at the wedding. How are we doing in the markets this morning?
We're doing well, Spencer. A little echo there. S&P futures are up 21.5 handles at 44.11 and a quarter. Nice overnight move to the upside. All-time high 22.50. That was made on Friday. All-time closing high 14 and a quarter. Crude, that's down to $1.08. Held 72, but seems running into little problems here at 74. So maybe that's the new trading range. Gold, kind of right where it was when I left, but it's down 720 at 18.10. Silver, that's in the red by about a nickel at 25.5. Bitcoin, trying to shrug off some taxation worries, hit the top of the range at 41K, pulling back a little bit this morning, only down $185 at 39,770. And Ethereum, that's up $222. That's going the opposite way. The futures are at 26.14 and a quarter. Now we're hanging at the top of the trading range in Ethereum. So a little bit of diversion in the cryptocurrencies. Triple D.
What's up?
You know what? This market's stuck. It really is.
Big time.
It is. And what do we had? We've had 8 out of 9 up months, which is a good thing.
Yeah.
And we're just look at the chart here. I mean, we're just consolidating near all-time highs, and you know what that means?
Tell me what it means.
Getting ready to break out. I mean, the trend.
Getting ready to break out.
Break out to go higher. You know, and move up, consolidation, you're in an uptrend, break out of the consolidation. I mean, whatever you want to throw at this market, it doesn't stick. And here we are. I mean,
we know what happens. Let's just say, even in the event that, Delta starts to spread significantly, which there's a very likelihood that it could. Obviously Florida record cases. But we know what happens when the market starts to sell off. Who's got her back? The Fed's got her back. I mean, so it's kind of like the market. Heads, the market wins. Tails, the market wins. People are not scared to buy the dip because they're like, if we get any type of significant pullback, we know the Fed has the markets back. And, if, Delta starts to fade off, we're set up for the great reopening trade, right? We know tech works in all environments. So you're in this market where there is fear out there of the variant. There is fear in certain stocks, but for the market overall, there is just no fear. The fear of missing out trumps all. Every time we try to sell off just a little bit, the buy the dip mentality It's just there. It's learned behavior. It has worked, basically since the beginning of time, really, because we know the markets are at all-time highs. So anybody who's bought the dip on SPY has always made money. Now, I'm not saying everything's always going to work. There is periods of time where the market can have, an 8-year period or 10-year period where it's down. But this, the earnings have been actually really good. The response to them has not been great. But Joel, you're absolutely right. I mean, we're right there near all-time highs. Lots of things to worry about. The market just doesn't care.
Yeah, no, we got the rare Sunday night earnings event.
Wait, I just want to one more thing on that before we go to Square is do you also think, I mean, everybody remembers what happened last March. Do you think in terms of the wicked bounce back, right? That literal V bottom, right?
Yeah.
You think anyone's gonna watch a 2-3-4% decline and think, oh, I'm not gonna miss this one? Here we go.
Yeah, they are.
Two hands.
Yeah, that's what they do.
I mean, I'm in that club. I missed the bottom. You think I'm going to try to just watch?
And I have a lot of cash too. I've been conservative. And I'm still sitting with quite a bit of cash because I'm still uncertain. But when you look and you just start analyzing that, you're like, yeah, on dips, you got to buy the dips. So would I buy Amazon on the dip? Yep. If I didn't already own it, I would. And, maybe I should just add to it because, that's what seems to work. Buy the dip has worked forever. I don't like to buy on day one, so I would use the bogey. You know how I trade. I've set these trades up a bazillion times. I have the big sell-off. I look at the previous day's low. Look at Robinhood. I tweeted about that on Friday.
Oh, wait, Dennis, you know what? Actually, I'm glad you mentioned that because I did not see your tweet, but I saw the same thing you did. And that level, as you would say, is
huge level. I don't know if I'm saying that or if the thing's saying it, but we're both saying it. But
huge level.
I tweeted it out right when it was at 33.40. I'm like, they're trying to hold it. They're trying to hold this 33.35, and they did take it out a little bit. And that went down to 33.25. But overall, it held. I mean, when you get the big candle, and somebody's tweeting at me and saying, what are you talking about? It's traded for one day. There is no huge levels. That's absolutely not. I always say, I like to trade and have a little bit more information, but it's the only level. It was only not just a huge level. It was the only level was the 33.35. So when you have like one high and one low on you of one bar, those are big levels. So it held. And you know what? People who were buying it down there made some money on Friday. So, I mean, you got to look at those previous days low. Joel and I have traded this way for 20 years, looking at previous days lows and highs and looking where is our out. Why? Because it defines our risk. It gives us an out. So I don't buy on day one, but I'm not scared to buy on day two if it holds the previous day's low. Takes out the previous day's low, I'm out. That's where, you can look and you can set up your trade. It sets up the risk for you. The hood starts breaking down and going down 50 cents, you got to get out. But you got to give yourself some wiggle room there too. I mean, it did take it out by the low, obviously. They're not easy trades. But at the same time, you just got to respect those previous days lows.
I don't want to open up like a can of worms here, but as far as market structure goes, and Dennis, I know this is something you've been talking about for years, but I guess nothing's happening on payment for order flow. I mean, this is just something.
I think so. If I was, and I had this question from a reporter last week, what do you think is going to happen with the payment for order flow? More disclosure. Are we getting rid of payment for order flow in the U.S.? Highly, highly unlikely. Why? Because this is the reason that the brokerages will cite that we can have zero commissions. They're going to come back and say, you get rid of payment for order flow. How in the hell are we going to keep it at zero commissions? That's the argument on the other side. It's a strong argument. The regulators don't want to mess with that. Markets are at all-time highs. I mean, you're not going to see major changes in PFOF. Sorry. Would I like to see it? Yeah, I've argued, and I've been trying to obviously promote and to get more trading going on exchange for a decade. I've met with the regulators multiple times. I've worked with the CFA Institute. It is a major issue, but regulators haven't really responded. For good reason, is that the argument on the other side is really strong too. And the other side is that we have free commissions, and pay more for order flow is a big reason why we have those free commissions. So I understand the other. I'm on the opposite side. I still think, you could get better execution. You could get a tighter market if we put more orders onto the exchange, right along with what Dave Lauer was saying. Completely agree with Dave. I've known Dave for 12 years, and completely agree with everything that he's saying. But, the argument on the other side is strong as well. So I can see both sides of this argument. So I personally think you're going to see more disclosure. You're going to see maybe a little more transparency. I'd love to see more transparency in the FINRA tape, because right now you have half of, and if regulators are listening, really, low-hanging fruit. Let's get some more transparency in the FINRA tape, because we got 40-50% of trades happening off exchange, and they all show up on the consolidated tape as FINRA.
And you don't know what that means.
No, we don't know.
Yeah.
We don't know. It could be so many different things. It could be an off-exchange market maker, and we can kind of guess those ones. They're the ones with the sub-penny price improvement. But, there's institutional orders that are going off exchange. There's so much stuff happening off exchange. Let's break it down a little bit more. Let's see what is in the FINRA tape a little bit more, and then that gives us all more information. Because we really, when you're looking at it, and CFA Institute did a study on payment for order flow, in the UK from 4 years ago, but it's tough. They struggle. They don't even have a consolidated tape, for so many years, so it's a completely different. What I mean by consolidated tape is every trade that happens in the US has to hit the consolidated tape. It's a CT. It has to report onto that tape. There's certain time frames where it's trading off exchange. They sometimes have a little bit more time to hit the tape, but they do. And internalizers, off exchange market makers, hit the tape immediately. But you look here, you just see everything FINRA. I mean, I'm looking at, bring up, any stock, and it's just littered with FINRA. Well, let's break down FINRA a little bit more. We don't have necessarily, and obviously I think there'd be a, we don't want to, I would love to see, who was doing it, but they're not going to allow that. But, can we just see it was an off-exchange market maker? Can we just see this was a cross, at Liquid Net? I don't know if they can break it down that much. But, we break it down by exchanges here, and you have so many places, off-exchange market makers, dark pools. Can we see it was in this pool happening? Because, if I see lots of liquidity over here, maybe you want to go and you want to transact over there. So breaking down the FINRA tape would help a lot.
Thank you for that, Joel.
Okay.
Sorry, it's Monday morning.
No, it's important, because if you're looking at this stock, and you're truly worried about something like that, then that's a big reason. Because if that goes bye-bye, where they, I think I'd have to go with Dennis's argument on that one. It's
more disclosure is the only thing we're going to get. We should at least try to get that. There's no way, I will say right now on record, there is very, very little chance of a ban
going back
of payment for order flow. You know why? Because the UK put a ban in 2012, payment for order flow. Canada doesn't allow payment for order flow, yet we still see lots of off-exchange trading happening in Canada too. So I mean, and on US stocks, like the Canadian brokerages, there's a point here to be made too. They don't receive payment for order flow when you're trading a US stock through your Canadian brokerage account, but you still see them going and routing to off-exchange market makers. You still see that sub-penny price improvement. So even if you were to ban payment for order flow, there's the argument on the other side that not all the volume is going to necessarily just come onto the exchange.
All right, when Joel and Dennis are looking at the order book for orders that are coming in by price, what are they looking at? And I believe that that question is referring to the New York Stock Exchange open book, where you can get through to a variety of different platforms for New York stocks. And
well, that's one exchange.
One exchange, yeah.
Like you have, I can't even keep track of the amount of exchanges. There 13 public exchanges, 14 now. I can't keep track of them. They're changing all the time.
Yeah.
But I mean, I subscribed them all. I got NASDAQ Total View. That shows you all the orders. And this is pre-trade transparency. So you have post-trade transparency, which is trades you see occurring after the fact. And you have pre-trade transparency, which is trades that, you haven't occurred yet. So you're seeing the book. You're seeing where orders are. You can subscribe to ARCA Book. You can subscribe to NASDAQ Total View. You can subscribe to the New York Stock Exchange Open Book. There's all kinds of different. You can subscribe to a consolidated feed that just, is cheaper and, doesn't break it all down. I mean, there's lots of different ways. But if you want to pay for all that stuff, it's expensive. I don't know what I pay for quotes every month, but it's a lot of money. So it just comes out of my trading account, and I maybe should pay more attention to it. But I know New York Stock Exchange Open Book $60. But then you got Total View. I don't even know what that is anymore. They change the pricing all the time. I think it's well over $100 a month. It's not cheap. Arcabook, I think, was always cheap. It's around 10 or 20 bucks, maybe. It's fairly cheap. Again, don't quote me on these. I'm bad. I subscribe to them all, and they change the pricing. I don't look at it close enough to even know what they charge anymore.
Which one do you think you rely the most on, or you look at the most?
No, you know what? Total View is important because you're seeing all the depth of the NASDAQ. Because if you're just getting level 1 quotes, you're not seeing where it thickens up, where there's a big order. You know, like on Apple, for instance. Total View told me there's 150. There's a crap load to sell there, and that 150 level came up huge. What helps you with the book is you can see where it gets really, big orders in certain spots. Now, there isn't a lot of years ago. You really needed this information, because there were institutions that were throwing big orders on the book. They don't throw the big orders out there as much. So, it's not as easy. There's icebergs, there's different types of orders. We're going to talk about all this stuff, Joel, when we do our event on, and what's the date? Maybe you could give a quick
promo.
We
forgot to do
Link
that.
is in the description. August 21st, 9
Excellent.
to noon. Link in description for the pre-market, the 3-hour Saturday special pre-market prep webinar.
Yeah, we'll be covering that. Opening orders, closing orders, imbalances, a lot of different strategies there. But okay, look at me. I come back from 2 days and I start tangent Hanover.
No, it's fine. We will move on. The last thing I'll say is, for those wondering, Robinhood said that about 1% of their funded accounts participated in the IPO last week. So that's about 300,000 users. Anyway, moving on here, we had Square report earnings over the weekend. They did so because of this deal that was announced. It's a big deal. They were buying Afterpay, which I have to confess I had never heard of. That's because I'm not in Australia. I guess I hadn't
heard of it either.
If you're in Australia, you've definitely heard of this company. It's a $29 billion deal. That's like 25% of Square's market cap. So very
that's a big deal.
It is a big deal. It's an all stock transaction. So there was a ratio. I don't think you care though, because Afterpay doesn't trade in the US. I'll just tell you, Afterpay shareholders will get 0.375 shares of Square for every share of Afterpay that they own. Square is buying Afterpay at a price that basically amounts to a 30% premium from Afterpay's Friday close. So they're paying they're paying up. It is an expensive deal. It is obviously the biggest deal in Square's history. It is the biggest M&A takeover in Australia history, or is what I read. And it's Afterpay is basically a buy now, pay. It's a lot like a firm, actually. It's buy now, pay later. But they don't charge crazy interest like Rent-A-Center does. It's like that's like the new model. Anyway, Square's numbers were what they are, but almost irrelevant this morning because it's all about the deal. And again, a huge deal. Can't stress that enough. If you're spending 25% of your market cap on a deal, that's a big deal.
Yeah, and they paid a big buck for this. This company was trading at 42 times sales. At least that's what I was reading in my Twitter feed. So I know nothing about the company as well. Like I said, like you said, I hadn't even heard of it. But I mean, they paid a big buck for this company, and maybe it's worth it. But the market punishes acquirers, and typically when they're paying, very, very high prices for stocks. So it's not surprising the Square is getting hit here a little bit this morning. Would I buy the dip on Square? Not on day one, but maybe tomorrow, again, using today's low as a bogey. So we will see SQ. Sometimes it pays, obviously, and sometimes it pays to buy on day one. Sometimes they bounce right back, but a lot of times they don't. And I don't want to be the one caught holding the bag. It goes down 10, or goes down 10, might go down 15. So I always just wait. I play it a little more cautious and use the previous day's low. But down 4.3%, it goes on to the potential buy the dip, but not till tomorrow. At least
you did the initial reaction on the four. How many times you've seen this? The initial reaction took this down to 233, and you got a bounce.
What time is that at?
I was on the 4 a.m. bracket.
When there's no liquidity and people say, "Get me the hell out."
Yeah, I could probably break it down. Let's see if we can break it down like to a. Let's see if it happened within 5 minutes. Actually, it took. Yeah, it was actually the full 15-minute bracket that it took to make the low. So, it wasn't just a second thing. This is tough because you had the big run, you had the decline, and you were working your way back last week, and looked like new all-time highs were in, just within reach. And now you're right back at half of this move. That actually comes out at 237. So that's where you are right now. So I'll watch that for a couple days. For resistance, just for today only, bottom of yesterday's range was, or Friday's range was 44.35. And then you got these lows right here in the lower, that's at 232.20. So let it shake out. See if it, if it holds the pre-market low, it could very well drift higher. Let it shake out for a day or two. Big deal, though. That's one of the biggest deals we've seen in a long time for Square. So in no man's land.
And I mentioned a firm. There's two ways to think about the deal like this as it relates to other companies. You could look at a firm and think, oh, major competition. Or you could look at a firm and think, whoa, maybe takeover target. Looks like the latter is what's prevailing this morning because a firm is trading higher.
Up $5.
Up $5. A firm has got a $15 billion market cap, which is basically half of what Square just paid to buy Afterpay, right?
Yeah. So, and it's a stock that has been just hammered.
Right.
I mean, it was $146 back in February. It's $56 at close, trading at 61. So good point. We love the sympathy trades. I mean, I don't like paying up 8% for anything.
It's AFRM is your ticker on it.
AFRM.
So
you get up near 70, all kinds of resistance up there, a long ways away, and then you just got to look at 2 days ago 62.77. So how high did we get in AFRM this morning? Has anybody got overexcited? Just kind of
they got
drifting up.
61.50.
Yeah,
is where you got. Who? And the only reason that I just remember this one is because of the name, Affirmed, right? Name of the great horse. But I remember Sean liked this one. I know I can't remember when we had him
Sean on in a while. Let's get Sean on.
Sean was on.
I think he was on when you're gone, Dennis.
Was he? Okay.
Yeah.
Yep. I miss Sean. I always like Sean. He always gives me good tech stock picks. The tech stock strategist, Sean.
Yeah.
Exactly. That got a little bit of a pop. Faded back a little bit on the sympathy play, so we'll see. Doesn't look like 101,000 traded. That 61.50. What do we have? Do we have something we can line up with it? Ooh, keep an eye on that level, folks. 61.40 was Friday's high, so you get a little coincidence or not coincidence. Well, I'm trying to confluence. So keep a big eye. 61. 61. Yeah, getting back. 61.40. Friday's high, 61.50 pre-market high. That's the key to your high for the week at 62.77.
For those of you who do care, Square did blow away their numbers for last quarter. EPS crushed it. Sales they just destroyed the estimate.
Yeah, let's take it off your calendar. It's not going to report on Thursday here now. It did report over the weekend, and they were good.
What? Oh, wait. Their sales. Oh, anyway.
Sales were light.
Okay, sales were light. I'm sorry, I misread that.
Sales were light.
Moving on. Let's talk about GE, guys. GE. Did you ever think you'd live to see the day?
I knew it was going back to it.
GE is $100 a share.
$100 stock adjusted close for the reverse split, $103.60. So it is actually trading down 80 cents here this morning. So GE coming in here a little bit. Typically, you don't want to be buying stocks that are doing reverse splits. We've talked about this before. We saw this with AHT as well, a recent reverse split, and the stock has continued to drift lower since the reverse split. Like you were saying, lots of people are like, oh, it's over $100. Let's short it under 100. I mean, this is, and that was a joke, but I mean, this is the mentality. It's like a stock. It's like, oh, sudden $100. And it never seems to be a buying opportunity reverse split. So typically they're more a selling opportunity when the stock price pops up off the reverse split. So tough, but this thicker stock, we'll see what happens.
It's not going to be as thick anymore. But
it just thinned up by about 800%.
But you know what? It still looks like it has the same kind of levels that. I mean, it's still GE. It's still gonna have its 115 is like super edge. That was probably equivalent to the 1450 area. So there you go. I mean, you have a clear area that you need to take out over over 115. We're $13 away from that. That's your major resistance since July of 2019. So we'll let it shake out for a couple of days, see how it trades. But I like that number that Dennis gave you, that adjusted close, as potential reason. Yeah,
I think it'll struggle to get over that. I wouldn't be surprised if we actually tested 100 today. So calling for a bit of a sell-off.
It's going to be thinner. It's going to be
thinner.
Yeah. Oh, definitely. By an 8.
Not the only reverse split today.
You got another one?
SolarWinds, a 1 for 2. Not as drastic, but a 1 for 2.
Oh, so reverse split's the new cool thing.
So
to
in
do.
SolarWinds, the
is
chart,
that a reverse split?
Well, the chart's weird because they just had a spin-off. So the that gap is a spin-off. That gap down is a spin-off, but now the gap up is a reverse split.
Okay.
So this chart makes
it's trading down SWI, and it's trading down $1.50. So, but that's actually just an odd lot. It was a small, or actually, it was an odd lot. Somebody did hit it down 21 in ARCA. It's really wide, man. It's 2011 all the way up to 22.45. This thing's like, drive a truck through that spread. So 22.50 is where it closed. This offer is all up there. People want to sell where it closes. Nobody wanting to buy this till way down $20, which is, if you look at your charts, that's where your levels are for your support. So somebody's sitting at support with a bid, and somebody's sitting at the close with an offer, and there's nothing in between right now.
Oh, okay. Yeah, a spin-off and then a reverse split. Here's my technical analysis. Next.
All right.
Yeah,
no, I hear you. What else? Just on the earnings front, we did have on Semiconductor this morning, ON. They had good numbers. Stock is trading higher. Let me give you those numbers. It just came out, I think. As
chips all seem to have good numbers. It's just like how they, respond to those earnings. And this is one that it ran up a little bit in the last 3 or 4 days, but really, if you look at it from the last 3 or 4 months, it's gone nowhere. I mean, really, in the last 6 months, this whole year, it's gone nowhere. So popping up. Give us the numbers.
63 cents versus 49-cent estimate. Sales of 1.67 versus 1.62 billion. So they beat the estimates on both their earnings numbers, and they gave guidance above estimates as well. They gave a Q3 EPS range of 68 cents to 80 cents versus a 51-cent estimate, and they gave sales estimate or guidance of 1.66 to 1.76 billion dollars, which was above the 1.6 billion dollar estimate. So they basically came in above estimates across the board, earnings and guidance. Said that we continue to see accelerating demand for our products in our strategic automotive and industrial end markets. So it was strong demand, basically.
Bid or offered at 42.80, Dennis? Because
it's offered at 42.80, bid 42.55.
Okay.
I don't see much till 44, to be honest with you. 44 is a huge level. So I'm not saying it's going there, but if it went there, I'd probably try to short it off 44 the first time. But it's hard to short on good earnings. They can sometimes blow through it. So if I was shorting the stock, setting up a short trade for you, which I don't do too often because shorting is evil. But $44, if I was setting up the trade for, if I was shorting at like 43.90, I'd stop myself out above 44.59.
Yeah, I see that high. I do see one intermediate high before that, and it's coming into play. So 43.20, April 28th high, but that was just one single high. But the double top Dennis mentioned right there, just under 44. Man, if this thing goes into reverse, I mean, I would just, if you're a shorter term trader trying to lock in profits, 42, I would just keep an eye on your 15-minute low, and that comes in at 42. But so right there, 42, 44, perhaps trading range in ON. And then I just pulled up AMD. Did they get some upgrades, or is it just
took
fine?
off?
It cleared $100.
Yeah, and it never looked back. We talked about this on Friday when the market was pulling back, and I said this is one I would actually buy the dip on. It was 102, and it went straight up from that open. Didn't look back. I mean, I don't own it now. I had it. I got spooked out, which I'm ticked off at myself for that. But stocks making new all-time highs. Definitely don't want to be short them.
Yeah, big move. So just trading up again here today. All-time.
I mean, you're seeing a lot of the semis, Joel. Marvel's breaking out. I'm long Marvel, MRVL, in the swing trade and long-term investment portfolio here. This is, a breakout for MRVL again. New all-time highs. I believe it's new all-time highs. Sometimes you got to go back to
Yeah.
the tech bubble,
No,
but
no,
I
this
don't know if
one.
I'm going to go back 20 years. I'm just going to assume it's an all-time high. You know, Nvidia is just sitting here, but
Yeah, what do you think
AMD,
of-
Marvel, Nvidia is still adjusting from the split. So, you know, we had the big run up for the split. Now it's kind of just digesting. And once it gets, if it can get through up through 200, then it starts to get interesting again too. I think eventually it probably does, but it's in a digestion period after the split.
They didn't bust it. You know, they tried to bust it the day after the split, and they couldn't do it. And just consolidating here at 195.
Yeah.
Let's keep an eye on the lot. You didn't mention 200. 198.53 was the high from last week.
Let's talk EVs for a second before we get Tim on here. You had the Chinese EV makers come out with their July deliveries over the weekend here. Li, Xpeng, NIO all reported, I guess, deliveries stronger. Of course, the year-over-year growth is insane, right? Because there was nothing last year. So, but I guess compared to estimates, they're all strong. So Li, NIO, Xpeng all trading higher. In the pre-market this morning, and I guess so was Tesla, though I'm not sure if that's related. Tesla does what Tesla does, but they're all trading higher.
Tesla's trying to take out 700. Ras talking about in the chat this morning. It's just such a huge level. We kissed up there to 697. We kissed up there back at the beginning of July. We kissed up there in the middle of June. Third time's always a charm. I think it does take out 700 today. I think there's room to 750 on the chart here for Tesla if it does indeed break out. I mean, a breakout's not a breakout until it breaks out. So it's got to get up over the 700, but we've tested it for so long. It makes me think we are going to break out here on Tesla. You know what's sleepy too is some of those lithium plays here. If you're going to say, you know, we're starting to get the EV trade starting to get hot again, which it apparently is with Tesla going, NIO and XPEV, you know, have come back a little bit. I'm still long some lithium. I'm still long some LAC. Both of these stocks look like these are in the longer term portfolio. I've had these in there for months. I don't intend to do anything with them. But, you know, as trades, they kind of set up like LAC kind of looks like it wants to go to me. So, I mean, you know, this is a stock that breaks out over 15. You know, you could have, you know, if you see the Tesla rally continue, I think some of the lithium plays could actually pick up some steam.
The only note on Tesla here is, you know, on earnings day, you know, you like to observe the price action to see what some of the bigger players are doing. But that really threw that on this day, it really threw a head fake because it had, you know, good numbers and it sold off. It was actually, you know, down on that day. Didn't quite get down to that sweet 620 area. You actually got down to 627.24. And then they just immediately changed their mind. Immediately. So the earning day action, good report. They hit it. They gave you a discount on the stock. And now look at that, 700 just sitting up there.
Yeah.
I haven't quite traded through it yet in the pre. Yeah, you did. You got to 702.79. So
it's a big level.
Big level. Closing above it too would be a big level.
It is 8:30, or just about 8:35 on Monday, which means y'all know what it's time for. Tim Quast, CEO of Market Structure Edge. Tim, good morning. Happy Monday. How was your weekend?
Good morning. Happy Monday to you guys. It was good. I was recovering from vacation.
Don't scare us.
We all are doing that, Tim. You know what? It's crazy. Joel took a vacation. I took a vacation, and the whole family came back sick, which is scary. We went camping, and my wife had the flu for 3 days. She got a COVID test. She was negative. Both kids are still fighting some barky coughs, and Natalie had a fever as high as 104, which was scary for a day. Like, I was scared we might have actually picked up the Delta variant, but apparently we didn't with the negative test. I kind of fought it off. but it's like you go on vacation here, and now you got to recover because you know what? Our immune systems are so low. Somebody coughs or looks at you wrong, and you get sick.
That's right. It's the consequence of our bubble world existence.
Yeah, true.
So are you healthy? That's the first question. Did you guys stay healthy?
We did. So you know, we employed the vital health strategy of consuming wine. That's
good.
You know, that's
alcohol kills everything.
I have to recommend. So if your listeners and viewers have not been to Lake Canandaigua in upstate New York, the Finger Lakes, So there's Canandaigua and then Seneca right next to each other. I recommend it. And there's the whole wine trail along Seneca Lake is just spectacular. And so Henry J. Weimer, Wiemer, Henry J. Weimer, great winery, one of the pioneers of the Riesling boom there in upstate New York. They make beautiful Rieslings, beautiful Cab Francs. So that will keep you healthy. You know, if you go out in the woods, you're going to get sick, Dennis. You need to.
Maybe I asked for it. It did rain pretty hard on us that last day.
Did it? Well, it's been a wet summer. It was that way in upstate New York too. Because it wasn't rainy, but it's usually 95% humidity, and it was very pleasant. And the locals said it's been much wetter, and so that's not that far from where you are, I don't think, Dennis. You know, it'd just be up to Niagara Falls and over the border, wouldn't it?
Yeah. So
little ways.
Little ways.
All right. Yeah. Tim, the theme for the past couple of weeks as it relates to earnings season has been numbers blown away, amazing, reactions not so great, right? Why is that, you think?
Well, so it from a trading standpoint, one is naturally reminded of Sun Tzu and the art of war, of course.
Of course, obviously.
Of course. I mean, that's tactics without strategy is the noise before defeat. So if you expect that just great numbers are going to result in great outcomes, and you haven't studied the demand and supply equation in the stock market, you're going to be surprised. And to me, it's that simple. Of course, I'm a devotee of market structure, and I think that it reflects the most basic economic principles of supply and demand. I put demand first because in the equity market, demand drives the market, supply influences its strength. And those two things, when you look at them heading into earnings, we talked about this, last Monday, that I didn't expect that the market would do poorly because sentiment was bottoming, but I didn't expect that stocks like Tesla would necessarily do. And I heard you were talking about Tesla, and I'll show you what changed. Yeah. I said that to looking at Tesla, I wouldn't buy it now. I want to buy rising demand and falling supply.
Let's look at Tesla, because a lot of people are talking about it this morning.
Okay, well let's have a look at this from a market structure standpoint. So if you're following along, you can do this, everybody. If you haven't yet tried Edge, just go over here and you can put your name and email in, and it doesn't take a credit card. You can do this for 14 days and come back next Monday to pre-market prep, and we'll talk about what's changed. So let's look at Tesla. And I have not changed any of these. In fact, I didn't change the date, with apologies. I meant to do that. But I wanted to keep the same stocks, because let's look at Tesla here. Now,
can you share your screen?
Oh, did I not finish that? Oh, no. Sorry. This is what happens when you go on vacation. You forget how to do stuff.
It takes you a couple days to get back in the groove.
So it's not July 26th. It's August 2nd. But okay, so here is how you will see Tesla in an Edge portfolio. It's a set of numbers that tell you the supply-demand equation is dead even at 5. Sentiment is trending up, though. That's what you want. You want to buy rising demand. Supply side, 38%. Just compare that to Amazon at 47% short. What that's telling us is the percentage of volume coming from borrowed stock. So high-speed traders, we call them fast traders. So Apple, by the way, is led by that behavior. Here it's indexes and ETFs. Believe it or not, the new money is going to come in, and money wants to be allocated to Tesla. And it doesn't matter what the stock pickers think. If passive money is being allocated to Tesla, it will rise. And so you want to know those things when they're occurring. These things look, this is a change. If we look at the data visuals here, here's what happened. When we talked about this last Monday, I said, it's demand is below 5. So stocks tend to do better. The gains tend to come when it's above 5, excess demand. and I look at the supply side of the equation, not great, it's not terrible, but look what happened. Here's even you don't have to capture all the gains, but you want to buy rising demand and falling supply. So supply trended below the trend line and demand rose. Well, now I'm going to buy that. That's what you buy, and that will capture gains and avoid losses. That is the strategy. The Sun Tzu strategy of edge is capture gains and avoid losses. The tactics are buy demand of rising demand and supply that's constrained, and avoid the opposite of those conditions. So that's why Tesla is rising. And could it continue? Well, go back here. We can have what happened the last time? Well, when it got up to 10 and then demand began to wane and supply jumped above trend, price fell. Now, it's not perfect. It will be lumpy. Price is capricious. Whereas supply and demand are not. They're predictive and fairly consistent. And so you could just wait until, now we've got this rising demand and falling supply equation. That's what we want to buy. And now you can capture those gains. And it's not about the numbers, people. It's not about the numbers, because if it was, you would see active money as the lead behavior. It is purely models that say, well, there's an awful lot of exchange traded funds that want some exposure to the things that Tesla represents, whether it's ESG or EV or pick it. Consumer discretionary is a huge part of the consumer discretionary allocation now. And that is how the market works. And indulge me for one more moment, because I think there's a very important overall lesson about the market. The market is about time frames, purposes, and horizons. High-speed traders, fast traders, are continuously sifting supply and demand, and they have the shortest horizon and the least risk. Passive money has a little longer horizon, but they're following a model, and wherever they vary from their model, their strategy, they hew back to it, and that happens generally monthly, maybe even 2 times a month. So a little more risk, but still a constrained risk. You know who's got the greatest risk of all? Buy and hold investors and corporations, because their horizons are years out,
right.
which then take into account all the things that can go wrong over those years. And so time is risk. And that's why I say you want to you have to eliminate time as your risk component. And that's what we try to focus on with Edge. There, that's the art of war thought for the day.
I can never quite know which direction these are going to take it, but I do know there's always going to be some obscure reference to some random thing when Tim joins us every Monday. So, Tim, what are you looking for this week?
Well, there are 1,600 companies reporting. So isn't that something? This is actually the heart of earnings. Yes. You would have thought last week was, but this is it. And the companies who are reporting this week are at a distinct advantage over the people who reported last week. Why? Once again, it's a concept of how the market works. Last week was month-end window dressing. You're going to true up your model. If you're a hedge fund, you want to lock in your gains so that when you send a statement to your customers, your clients who have funds with you, that you can report that you had a good month. Well, that's difficult if you're reporting into that. It's much better to report in a new month, particularly the first week or so, because that's when new money comes in. So I could write our market desk note and look at the trends in the market. I wrote it yesterday I send daily notes to Edge subscribers. And I could look at the broad market sentiment trend, and it's rising. I could look at all the trend lines across my dashboard. They're rising. And I already know what the market's going to do today. I don't have to wonder, because all the demand charts are up and to the right, and it's the new month and money's going to get deployed. Now, the question is, how much staying power does that have? But that means, to answer your question, Spencer, that it's probably this would be a better week than last week to have exposure to companies reporting results. I tend to avoid that. I sold Facebook on Tuesday, even though the data was fine, because I don't like those conditions. I don't like the capriciousness of what happens to stocks with earnings, because there's so much speculation and the use of derivatives, and then it's month-end window dressing to boot. I don't want to get caught in that. And so now we're out of that. So it will be a better week, at least for a few days, and then we'll see. I'm still concerned, and we can come to that at the end if we want, about the big picture. But that's what I think will be the case this week. I think it'll be a pretty good week.
We got so many companies reporting. I just want to go to a couple specific ones because everybody's been talking about Alibaba. It's been trading like a yo-yo up and down. I'm going to report tomorrow morning. Would love to see the market structure sentiment on Alibaba.
Let me fix this while I'm at it. Okay.
This would be interesting.
And let anybody else I should add while I'm at it, Dennis?
Yeah, sure. If you're in here, I was going to look. Roku is going to report on Wednesday. General Motors as well on Wednesday. So those are big reports that I'm watching.
Okay, GM.
Can you add RCL to that?
Yeah, absolutely.
It's also Wednesday. Okay, cool.
Okay, RCL, and let's see, General Motors. There we are. Okay, let's take a quick look. We'll do this really fast. So Alibaba, it's miserable. You look at that, 1.8 and down.
Yeah.
Once again, what's the lesson, traders? You want to buy rising sentiment. They don't want to buy falling sentiment. I don't
You're
care
not
what
seeing that happen yet.
Right. I look at that and say, it's not great. The supply side's fine. It's, there's no supply side issue, but the supply side also tells us there's no excess demand. High-speed traders can manufacture stock. We talked about the exemption from the short locate rule. I look at this and say, boy, things have to change before this offers opportunity. You're taking a big risk with Alibaba right now, just from a supply-demand perspective. So then let's go look at Roku and RCL and then GM. So here's Roku, 10 out of 10 top, 61% short, passive money leading. I mean, that's remarkable. The trouble is most of the gains probably have been realized. So, it's peaked. So look at this. Demand has hit the top and supply is rising. It doesn't mean that it's going to collapse, but no matter what, I never buy a 10 out of 10, 61% short stock into earnings, because I have seen for more than a decade providing analytics to public companies and telling them this very same thing. You're going to report great results and your stock's going to go down 8% because demand has peaked and supply is rising. And that's what's happened. It's market structure. It's not your story. You got to make sure your executive team knows that. Otherwise, the IR team is going to get blamed for blowing the message. And it's not the message. It's supply demand. So Roku, my view, avoid it. So let's look at RCL. 9 up, 55% short, fast traders leading. Again, that's a difficult chart. I wouldn't buy it. It doesn't mean it's not going to do well. If we looked at that whole group, I'm going to go to the dashboard because I track this group all the time. And you can see it. The first portfolio will be airlines and cruise ships. And, here was the ramp, the steep ramp and the drop in short volume. There was a brief opportunity in this group, and I think it's about done, unfortunately, Joel. I think it's challenging to me. That to me would be you're taking a bigger risk with that group. So last one, GM, right?
Yeah.
Okay, let's take a look at that. Best of the group to me. It's a 5, trend is up 32%. So rising demand, limited supply. High-speed traders think there's going to be an increase in demand for it. That's why they're out front. So even though that ticked up a little bit, it's right at trend, and there was a nice covering that occurred right ahead of this move up in demand. I'd look at that and say, that's a pretty good bet. That's one, if out of any of them, that's what you would buy heading into earnings, I would say.
All right, Tim Quast is the CEO of Market Structure Edge. The link is up on the screen. It's also in the description. Tim joins us every Monday, and we appreciate it. Guys, smash the like for Tim. Great stuff as always, Tim.
I just did.
See you next week.
I like Tim.
Good to see you guys. Thanks a bunch, guys.
All right.
You like market structure, Dennis. So
I like everything. I like everything Tim talks about.
No,
I'm a Tim Quast fan.
Let's do some ticker time. We got some tickers in the chat. I've been doing my best to keep up throughout the hour. Let's start with the one I wrote down first this morning, which is Netflix. Somebody asked about Netflix at the top of the hour. Let's look at that chart.
I haven't looked at it for a bit since they got into the video gaming, and then they decided that they were going to punish the stock for that. It's come back in. I mean, you're at it's interesting. 504 is a low of the move. You're quite a ways away from there. I don't know. You're kind of in the middle of nowhere. Joel, I'm going to throw you this one because it's a curveball.
You had earnings. What was that?
2 weeks ago.
2 weeks ago, and it kind of looks like you put in an earnings low there at that 504 area. So, yeah. And then on the rebound here, 520. I think you got room up to top 525 area, 524.47, and then just to see if you either get a trading range and then come back, or if you bust out here, but. Other highs to contend with, Thursday's high would be your first one to come in, trading at 520.78, and then top of the range from last week, 524.47. Really don't. I mean, they didn't bust it after earnings, so looks like it's just crawling its way back. Kind of like the market, like not definitely. It's not a chart going down, but it's not exactly ripping up.
There is some conversation chat about casinos, specifically Wynn and LVS. I think we feel like we talk LVS a lot, but somebody asked about
because I'm long in and getting killed.
All right, but Wynn was specifically the one that I wrote down. WYNN.
I liked 100 too, but they just can't. The reopening trade. Okay, so here it just talk delta for a few minutes here. I mean, I think this delta, from what all indications look like, it's going to continue to spread. Yeah, I don't think we're on top of it at all. And, you're seeing a lot of people who are vaccinated now getting it. The market is somewhat worried in these stocks. And it's not coincidental that on Friday they were hammering these stocks too. So you get a relief pop, maybe in a couple today. Carnival Cruise Lines is trading higher for the simple reason that we didn't get a lot of bad news on the weekend. But if I look, and what I try to do, obviously we look at a lot of different types of strategy on the show, but I'm always trying to predict kind of the next, flow. Where is, the next news flow going? I think it's a fairly easy prediction to say that Delta is probably going to continue to rise here in the short term, and that probably spooks the reopening trade. So I don't want to own any of these stocks. Yes, I do have some Las Vegas Ands that I stuck in a long-term portfolio, and I wish I didn't. But I mean, when you look at this, it's becoming a smaller portion of my portfolio every day. I'm very underexposed to reopening stocks. I'm going to continue to remain underexposed to reopening stocks because I'm concerned that this Delta variant could continue to spread. If I wanted to own stocks right now, it would be tech and it would be stay at home.
These stocks are like, I just looked at Penn here, and that is it's bearing down. I mean, not on the low of the move, but look, just hit a wall of resistance.
This is a reopening trade too. That is not happening. The great reopening happened, like Spencer said on Friday, and is now people are worried that the great reopening trade is not happening. We're not going back into lockdowns, Joel. I mean, I think we're all in consensus. There's no way. Fauci said it too. We're not going to allow lockdowns again. But that doesn't mean that everybody's just going out and doing their happy things. If there's fear of Delta out there, especially since vaccinated people appear to be susceptible to it to a certain extent. They're not getting very sick, but there's a lot of people who are getting, Delta, and we're talking the COVID variant after being vaccinated. It is going to scare people away from, going on their trips and doing stuff. Some people are going to be scared.
It's so hard to know. There are two major things that are different this summer than last summer. One, we have a vaccine, and two, you can go, if you want to go places, you can go places, right? Like last summer, even if you wanted to go somewhere, frankly, where were you going to go, right? There really wasn't much to do. I think it's basically impossible to judge, even if Delta keeps spreading, it's impossible to judge how busy travel, tourism, all that will be, because some people, frankly, don't care and they have the vaccine and they're thinking, great, I'm good to go, and others don't have the vaccine, still don't care. Others have the vaccine and are still, staying at home, and so there's so many different variables. You just don't. It's impossible to know. It's impossible to know.
It's impossible to know anything. But what we do as traders is we try to predict, what we think. I'm saying my prediction here is that the reopening stocks are still going to be under pressure, at least in the next week or two, as negative headlines for Delta continue to emerge.
But my point is, last summer it was not impossible to know because demand was basically at zero, and we all knew it wasn't going to stay there forever. So we knew there was going to be a spike in demand as soon as everything reopened, right? That was obvious. And so now that we've already gotten that spike, that initial spike in demand, it's now it's anyway, that's just my take.
There's a fear out there, though. There is a fear out there. And
Yeah.
we're not saying, that it's just the next wave and we're all going to have zombie apocalypse style here. But if I was just looking at the news flow, I'm seeing the tick up in Delta. I'm seeing the tick up in people who are nervous about it. I'm seeing, headlines breaking, vaccinated people, 232 in 2 hospitals in, I believe, San Francisco of vaccinated healthcare workers caught COVID, caught Delta. I mean, these are headlines that there's a reason why you see Penn Gaming. There's a reason why you see Las Vegas Sands, why the airlines have all got hit. Is it all priced in? Maybe, but I think the headlines are still negative. So until we start to see, that those headlines stop ticking higher on the Delta, I don't want to be long these stocks.
Maybe.
I would rather be long tech stocks, and it can change on a dime, and you have to be prepared for it to change on a dime. But there is definitely justification for Penn Gaming to be at $68 down from $110 3 months ago, because you know what? The great reopening trade that we were predicting hasn't really been as great as we had hoped it would be.
I don't know.
And the summertime too is where, the only thing that's disappointing to me is, the summertime. It's gonna, supposed to be better, than the fall when you get in flu and cold season. But
maybe that's true. That's true.
Just from the eye indicator, though, airports were busy.
Yeah. That's what I'm saying, right? I traveled multiple times. You've both traveled, right?
Yeah,
I didn't go to an airport.
No, but you traveled somewhere, right?
There's stuff going on.
Yeah,
we're not shut down.
Right,
there's stuff going on.
Right,
but this market doesn't care about what has happened. It cares about what is going to happen. That's all that the market prices in as expectations. And if you're looking at these airlines, cruise lines, casinos, reopening plays, they're nervous about Delta. The stocks are nervous about Delta. There's a clear trade. Even to the stay-at-home trade, look at what has occurred in the last month. Stocks like Peloton have started to come back up. Yes, in the last week, maybe they started to sell off. But Roku in itself, it's been an ugly couple of days, but we were down at under 300 in May. We're back up at 420. So, there has definitely been this trade that has occurred. Does it continue? I don't know if anybody, like Spencer's saying, I don't know if anybody knows anything at this point in time, but the headlines matter, and they are mattering to the market here. And the Delta headlines, and you can clearly see the spooked that certain sectors, despite the market at all-time highs, there are certain sectors, the opening stocks, that have not participated and have actually got hit. And the reason for that is Delta.
Yeah. Okay, let's just do one more. There was a newer one in chat. Small cap, $600 million stock, RADA. They had earnings this morning. EPS beat, sales beat, RADA. Newer one. Again, it's just a $600 million stock, so it's a little bit smaller.
What stock is it?
RADA. RADA.
Never traded this before.
Like I said, it's $600 million, so it's a smaller company. But I was wondering if Joel had any thoughts from the chat.
It's trading up. It's moving up. Only 24 cents. I see an area of resistance, and it's just two highs in the same area, and that's your bogey. 1360, 1363, or 1327. It really opens up to 14 and beyond. But right now, sellers stepped ahead of their last couple days, but keep an eye on 1360.
All right, 8:59, guys. Any final thoughts before I let you go and bring on Matt from IPO Warriors?
Absolute confusion in this market. You've got a market at all-time highs. You've got certain sectors that are not participating for obvious reasons. I think still the safest place to be is tech. Would I buy the dip on Amazon? You see if it holds yesterday's low or Friday's low, 33.06. That would be my bogey. I'm long Amazon still in the long-term account. It's going nowhere. Would I put it on for a trade? If we get a retest at 33.06 and it holds, I would. I think that's how I'm approaching all in this market. I'm still playing very conservatively, tight, and not loose stops, like not holding anything in my swing trading portfolio that I don't want to get stuck with. I think you got to play it a little bit conservative because there is unknowns, but there's also the market near the high, so you want to have some exposure as well. So if you're looking at dips, like people have been asking about Pinterest, PINS, look at Friday's low, 58.01. Does it hold? If it doesn't hold, then you think maybe you could see 55.
Ooh,
But
what happened to
$58 is
them?
the bogey.
Did they get downgraded?
Earnings.
Oh, really?
Yeah.
Wow. So they got pumped up on
Same
everybody.
thing as Amazon, really.
Oh yeah.
I mean,
Joel missed that report. Yeah, that wasn't a good one.
and the arguments here, Joel, people are going out and doing stuff. I mean, this is the same thing. They're not sitting at home dreaming about what their house is going to look like.
Right.
You know, there's actually people going out and doing stuff. So if we look at what's happened in the last 3 months, the reopening happened. Now it's like, okay, are we going to continue? Would I buy a Pinterest down here near 55, 56, 57? Maybe. The valuation's still crazy, but you know, I wouldn't be opposed to. There's some nice support down there in the mid 50s. So again, you got to stop yourself out though.
All right, I'm gonna hop off and still getting my market thoughts together, but got a good look at the S&Ps this morning. I'm gonna go over to premarketprep.com and cover that and some other issues. And Spencer, I will check in with you later today and see you at 3:30.
All right, let me see, Dennis. Let's bring on Matt Hammond here, and you know, I don't know if this week will be as exciting as last week. With it's not every week we get a IPO like Robinhood, but let's bring on Matt, IPO Warriors, and have him tell us how he. Well, he was on vacation, so I don't even know what he did last week. Matt, were you in the Robinhood IPO getting down dirty or not really?
No, I mean, like I said on the show, I didn't see it as a good IPO play, and last week, since I was on vacation, I really only had time to take any plays where I could kind of set my limit order on autopilot to get into a trade, and then kind of casually or even just set it and forget it, my exit. So I did take a couple trades on the easier ones.
Real fast, do you have a light so we can see your face?
Oh, my camera is not so set. I can go to the slideshow and we can talk from there. But,
all right, let's just go to the slideshow. Let's pick it up. Let's roll.
No, I got to get something going with the lights or a better lens or something. But yeah, I said that the Robinhood IPO didn't look too appealing to me. I do have it on the agenda here, so we can just jump right to it. We can look at the chart here. I expected the hype to not, the retail buyer not to show up for this one. And the reason was that they did a huge retail allocation. You had everybody in Reddit just bashing it, talking about, how do I short this? I hate them. They screwed them. I mean, it's really become, what was once sort of the anti-establishment tool that everybody used to get into the stock market. People very quickly turned against it during the whole GME, what was the trading desk that they kind of seemed to corroborate with that shut down the trading. Anyway, that got everybody really pissed off, and they kind of took this opportunity to get their revenge. Robinhood might be a good long-term play. Kathy Woods certainly thinks so, and she added to it on both days. Her, added positions to her, several of her funds. So the bottom seems to be at around 33 right now, and just like she did with UiPath for the first kind of few months, every time UiPath dropped to below about 68, she seemed to swoop in and buy it, and it sent it back up to about 72 to 74. And I took a bunch of swing trades on that one, and ultimately built a position on Path just because it seems to rebound whenever she kind of affixes herself to a stock. And I believe that Robinhood will get protected at around 32, 33. Certainly if you see anything down to 30, pick up a position and expect it to swing back. It's still a very profitable company. And despite, retail sentiment being against it, which is what, caused me to stay out of the IPO, there's a good chance that this has already kind of found its bottom down at around 30. And I see limited downside and, pretty good potential upside for a company that makes that kind of revenue. I don't really think payment for order flow is going to get abandoned completely. There's just too much money that likes it and too many people that appreciate free trading that are willing to sacrifice that in order to not pay. I mean, I think you've been trading long enough to remember what it was like to pay $10 to get into every trade and $10 to get out of every trade, and it totally changes your strategy. You're not going to dollar cost average in 50 shares or 20 shares at a time to build a position on the way down and then exit with multiple positions. It really kind of forces you into, I mean, especially if you're only buying $100 worth or a couple $100 worth of shares at a time, you're kind of starting every trade 10% down or 5% down. and that makes it very hard for retail investors, especially beginners, to profit off any kind of trading. So I think Robinhood is probably a solid company. They have a lot of room to expand. Yes, people do graduate out of the platform, but a lot of people like it for options trading. A lot of people get into it because it's easy to use. I personally don't like it so much as a platform, but I understand its position in the market. And I think that despite it having a kind of, not an IPO that you could, make a lot of money off right off just buying the debut, it's still a solid company. So definitely one and this is one of the reasons I love the IPO trading strategy, is it kind of introduces you to a new stock or newly traded stock on day one. And you really, I keep track of these IPOs, especially the hot ones. I understand, now Snowflake, we're almost a year on from it, and I know what its trading ranges are. I know why it went up. Not just, you look at technicals, but technicals are driven by market factors, announcements, news releases, headlines, and you develop almost like a deeper understanding of why a stock has traded in its range, why a stock, might be at a bottom where it's now a good time to buy it. First, and where it might swing up to, and what your exits might be on that. So, the strategy is not all just about trying to take profits in the first, couple days. There is a longer term benefit to having tracked or followed these IPOs from day one. Now, okay, well, a lot of people bought in at 38. A lot of people bought the IPO either through the allocation that was offered through Robinhood as the trading platform, and a lot of people, sold it right then. But a lot of, there is at least some institutional interest, hedge funds that are, ETFs that are buying this to support it down at the bottom. And you can kind of use this range if you do want to either take a long position or you want to find a swing trade opportunity, to kind of create your own ideas of where to trade this in the future. You have anything else to ask about or say anything about Robinhood?
No. I think that the big thing is there was this 30-day lockup for the 300,000 users that got some shares on Thursday. So I noted that, and in a month we'll look at this again and see what that does to the stock. But
that's really a great point, because lockup periods are something you want to pay attention to with IPOs, and assuming that a lot of people decide to take profits at that point. If you do want to take a long position, that would be an ideal time to look to, to build a position. So if it drops down to like 25 because everybody's sold on that day, you could anticipate a pretty quick correction to that as the real valuation of the stock gets recalculated into the price. Okay, that wasn't the only there were some profitable trades last week. I'm not going to review the ones that were only 5%. We'll talk about a little bit about Traeger grills later when we talk about Weber that's coming up this week.
Oh, talk about that. Yeah, I'm excited for that.
Yeah, I think the retail ones that everyone knows, that there's a reason we like to play those.
Yeah.
Before we get to that, I want to talk quickly about two wins from last week. Snap One is a fintech. The market was a bit weak during the middle of last week. And when you see something like Snap One, which maybe a year ago would have done really well, it's a fintech for bank lending, and it debuted at the IPO price. So you're basically getting a chance to buy in at the same time as institutional investors. Institutional investors that like this can add to their position. So when you see a debut at 16 like this, I like to do something with a weak market where I'll undercut the debut price. So if I see the indication price is at $16, maybe try for like a 50-cent discount, and maybe even stagger a few trades below the debut price, because these quick drops often immediately rebound. And we'll see something like this. We've seen it quite a bit in the last few weeks, where a stock will debut, drop a little bit, and quickly come back up. So you get to establish your position at like 1550, for example, would be a great place to set an undercut bid here. And then you ride it out for a day. If you have some conviction in this stock, if you see a lot of people who like this stock, a lot of analysts saying, oh, this is a pretty solid company, you can take your undercut bid to enter, and then just don't be greedy. Look for either $1 on the first day, or start looking at where to exit on whole dollar values. I would say that 17, if you got in at 1550, that would be a great exit. 1750, okay, a little bit better. So maybe exit in stages. But after the second day, if you held all the way through, you had a position where you could have taken $2.50 on the play, and that's not a bad 2-day trade. And these are the kind of trades when Other things aren't too exciting, but you see something and that's having an effect on the IPO prices. The debut prices do seem to be pretty sensitive to market conditions. And we saw a lot of IPOs over the last week get delayed, including Clarios, which is BTRY. That has a lot of institutional interest. It's a battery manufacturer. They've postponed their IPO. Teads, which is a spinoff that we were of ad matching platforms. It's delayed. So we see when the market's a little bit weak, yeah, you're not going to make the huge pops usually, but it does give you an opportunity to take little $1 and $2 gains, which if you're buying, larger volume shares, or you just want to take it, what I consider to be a rather safe play with limited downside and a good chance for a rebound, either, right away or what was that?
No, you're good.
Yeah. So anyway, this was a win opportunity. It was pretty straightforward. There were a couple others that weren't quite as dramatic, but did the same thing, including Traeger Grills, Riskified. Not a lot of downside, especially if you undercut the open and picked up that initial dip, and then you got in on you got an opportunity to take some profits. So when the rest of the market is kind of up and down, you don't know where it's going. The IPO market, when you look for these kind of dip opportunities, can give you a nice little day trade. So, or 2-day swing trade. So this is one example of that. The next one, just because it was so volatile and kind of came out of nowhere, because I was on vacation, I didn't pick up on IPOs. It kind of got added to the calendar midweek. And the reason it did so well is that they are developing, they're in the vaccine business and they have 2 candidates for COVID. And it just happened the day that they debuted, Moderna was going up. There's a lot of news about the the new COVID variants, and vaccine plays were just hot that day. And Icosavax, I think the IPO was priced at like 16 and it debuted at 26. So if you're watching that debut indicator at the, all day before it went live, you would have cued into this that, wait, this is getting some serious hype, 100%, or anywhere in the kind of like 70, 80, 100% debut premium. That's going to get my attention. That shows me people like it. Doesn't mean I'm necessarily going to buy it right away, but I'm going to be watching it. And when you see something dip hard like that, yeah, that's a little bit of a but it comes back up to VWAP here and you start saying, maybe this runs. And, if you did like this at all and you did put 2 and 2 together to see that it's a vaccine play on a day when vaccines are in the news, maybe you got in. Anyway, it went on a ridiculous run and topped out at $49.99. Very hard to catch this one, but something that I'm going to put in my memory bank and say, okay, well, if the headlines are hot, maybe it's cybersecurity is hot that day. Maybe, maybe vaccines are hot that day. Maybe we had last week, it was the gene editing when Intellius had a big announcement, and the IPOs from like the week before that were in gene editing, they all spiked. So these IPO plays seem to be pretty sensitive to kind of trending headlines. And if you have a little bit of a backlog in your mind, I said that last Monday, you guys were talking about cybersecurity. And I said, oh, well, SentinelOne, their IPO was last week and they're trading it still at like 46, 47. And last Friday it peaked, it jumped up to 55, for a moment. And I had been holding my position from the IPO at 46 and I got out at a nice profit on Friday. So recent IPOs, and especially like day of IPOs that relate to a kind of trendy headline or a market segment that's really hot in a given day or a given week, those are ones to watch. And this one on that day kind of aligned with the vaccine headline. And if you pick that up, would have given you a really nice profit. So keep that in mind whenever we're whenever you see story trades, think of what IPOs have been recently released, because if they're not already way up, they have a lot of room to jump. So this week we've got a few kind of like unknowns that were rescheduled and a few to go through. I kind of ate up a bit of time talking about Robinhood, so I'm going to jump into these. The first one is Alisio Therapeutics. I haven't nailed down an IPO date, and I wouldn't be surprised if they just got postponed, since a lot of people or a lot of companies seem to be postponing. The only thing interesting about this is that it's a low float, and we haven't had any kind of super low float IPOs debut for a while. I think there's a whole segment of traders that like to focus on those, and they're kind of looking for one to play now. Otherwise, it's just a clinical stage biotech focused on immunotherapies for cancer treatment. I generally would stay out of this. This was 7 million shares or 13 million shares. I'd just say forget it. But with 3.08 million shares, you got something that people might key in on, and it's worth watching, especially if we see a dip. People start like focusing on it. Someone will start hyping. These there's at least a couple trading groups that like to pick up these shares and then go hype it throughout the day, and we see them run towards the end of the day. Don't hold this into day two is my advice if you do try to play it, but keep an eye on this one. It could be fun. Clarius International, we discussed this last week. This is a major like battery manufacturer. They do low voltage batteries for transportation, not necessarily EVs, but like batteries for boats, batteries for cars, these types of things. Apparently large institutional investors are really hot on this one. They have large positions. They're wanting to add more. They do have top line revenue growth. They have free cash flow. It's a very stable company. It has a huge float with 88 million shares. So I'm not sure how, interested I will be in this, but I don't see a huge downside. And I do see a big upside, especially if it debuts without a huge premium. So we're not sure exactly what day this will go live. It was supposed to go live last week. I've seen indications that it would be today, but that seems very unlikely. I didn't see pricing for it, and IPOs almost never go live on Monday. So keep an eye on this one though. We might see an opportunity to take some. I'd look for like maybe a $2 profit on this one. I just see after 2 points, people seem to shed their positions and then rebuild if it drops from there. The Better Being Company, I think people have heard of this one. They sell vitamins, supplements, minerals, and nutraceuticals. They have some retail brand recognition, have growing revenue. They do have operating profit. The float is not particularly high, and they've done fairly well during the pandemic. I'm not sure it's like going to be super hot. I think there are other more interesting plays this week. So I'd want to watch the debut price and market conditions. If we did see a dip, maybe it's a little swing trade like I talked about before. I'm not really convinced enough at this point to get excited about it or necessarily want to trade it, but I will watch it. It'll give a little bit of an indication on how IPOs are doing this week. And if it does really well, maybe I'm more excited about some of the other IPOs later in the week. I don't expect it to just blow up though, because it's just vitamins and stuff.
Okay.
Cadre Holdings. Sorry, yeah?
No, I said okay.
Okay. Cadre Holdings, a little bit of an interesting company to learn about. They provide emergency equipment for first responders. They are profitable, but I guess COVID hurt their sales. There weren't so many big disasters that first responders were required. It's a 55-year-old company, so the fact that they're going public now, I don't quite understand it, except that maybe they need to raise some money to carry them through the downtimes of last year. And they have a pretty small float, just 0.15 million shares. I'm not super excited about this one, but it's one of those ones where you keep an eye on it. And if you have some kind of huge disaster where first responders is taking headlines again, this is one of those stocks that could jump pretty quickly. It's not a big float. It would be in the forefront of people's minds. I mean, I don't think we're ever going to see something like September 11th, but you just never know when there's going to be a big first responder event where this kind of thing, we saw a few of those stocks during the riots and the Capitol riots and other riots last year, where some of those, police equipment companies spiked, make huge spikes. So this is the kind of company that you want to keep in mind for those kind of story plays in the future. European Wax Center, this company franchises out-of-home hair removal systems to salons and other kind of beautician places. It was very hard hit by COVID. Not so many people were going out and getting their wax jobs, I guess. And I don't know if people changed their habits and they're kind of like, learn to deal with this stuff on their own during that time. And I really don't know much about this. I shaved my beard and that's about it. At least what we need to talk about here. And I definitely don't go to salons for any of the other stuff. So I don't see this as a very interesting play. 10 million shares. Maybe other people know more about this, have a different take on it. But for me, it's not anywhere close to my area of expertise. Okay, WCG Clinical. This one's pretty interesting to me because they handle clinical trials for drug companies, and there's a ton of biotech activity these days. They have growth. They're near even in their operating profits. And this is the kind of company that institutional investors love. It's kind of the thing behind the thing when it comes to clinical, biotech industries based on getting clinical trials approved. They all have to go through the FDA process. This company handles it for them. They make it more efficient. They give them, they offer a lot of insights and expertise. And the float is pretty typical for a company of this size raising this kind of money. And we have seen, where there haven't been a lot of big hyped retail brand companies doing their IPOs. This kind of company has done pretty well, these institutional plays. So I do like this one, and I'll probably give this one at least a mid-sized play, given that there's not a lot of activity elsewhere in the week here. Weber Grills, this is the one we were talking about earlier. All right, America and the world has gotten really into grilling over the last year as restaurants and other places are closed, and they are allowed to have their, their outdoor parties at, in their own backyards or, with some neighbors. This is the leading grill manufacturer in the world with 24% of the global market. They did really well during lockdown with 62% revenue surge over the year. And the only real question here is, I got that float wrong. Actually, the float is 46 million shares. Sorry, that's a mistake there. They have high brand recognition. The question for me really is, well, did people already all buy their grills, and are they going to buy more grills next year? I mean, where is this going forward? But that might not matter for the IPO day. Traeger, which did its IPO last week, it did all right last week. It IPO'd at 20. It debuted at 22. It peaked at about 23.70, I think, and it's pretty much stayed above 22 the whole time. So there was almost no downside to it. It's definitely a lesser known brand, and Weber is a really well known brand. I mean, if you ask somebody, who makes barbecue grills, I think Weber is the first name that most people would come to mind after George Foreman maybe. But in terms of serious grills, Weber is the brand. The float is a little high, but I think that'll be all right. I think enough people will like this that it's not going to crash out of the debut. If it does, I would be comfortable doubling down. And as far as brand name recognition, you can hardly ask for more. Okay, another one that is one of those companies you don't really know about as a retail investor, but institutions probably like this kind of play. It's called Healthcare Royalty, and they do exactly what it sounds like they do. They acquire royalty positions within the healthcare industry on anything from healthcare equipment to pharmaceuticals. They basically help fund, or buy the development of these drugs or these treatments or this equipment, and in return for that, they acquire the royalties from the ongoing sale of these healthcare items. Their royalty receipts were up 60% in 2020. So that's even, when I had some exposure before to the music industry and how royalties work there. And I know that when content got crazy hot, people who owned royalties made a ton of money. And when I see biotech and healthcare getting as hot as it is right now, those who create and manufacture the items, that's great. But what you really want is you want to have your hand in the pocket, or in the pot where everyone's dumping their money. And this is just one of those plays that, to me, institutions like this kind of investment. They like being in the money position. That's a great opportunity for investment. You're not even really, you're kind of insulated from the risks that other biotechs have, which is kind of a make it or break it business model where either your drug gets approved and you're going to make millions, or your drug fails and your company is basically worth nothing at that point. This company is kind of like buying up just the rights to the possibility of making money across enough assets that they're insured that some of their assets are going to create value in the long term. And even though the float's rather high, we've seen a lot of these institutional plays do well. So for me, maybe it's not that exciting. It's not going to do, 2 weeks ago, I kind of said, institutional, boring, blah, blah, blah. I don't know what it does. And I was wrong twice in a row. So now I'm going to at least start paying attention to these, continue to take notes. And at some point, if I keep seeing, win opportunities that I've sat on the sideline for, I might start realizing that I need to adjust my strategy a little bit to take advantage of these opportunities. The last one I have on the list for today, and I'm sure that we're going to see some shakeup during the week, so stay tuned. I'll send out some updates when I see the calendars get a little bit more confirmed, is Aspire Global. This company we reviewed last week, their IPO got rescheduled for this week. One of the reasons people keep asking me about this one is that it's a Webull offering or Click IPO offering, so you're going to see a retail allocation. They do OEM for vaping products that are manufactured in China, but then sold mainly in America and Canada. Reportedly, the US regulators have put a pause on all Chinese-based stocks on the IPOs. So wouldn't surprise me if this one gets delayed again. I don't know if they'll say, well, they manufacture in China, but their market is in America, so we're going to let them through. RLX, which is the leading kind of Chinese brand for the Chinese market in vapes, they did really well off their debut, but after that, China cracked down and the stock has really crashed since then. So probably don't like the downside potential on this one if it even does go live, and I think I would sit this one out. But just given the political economic climate between China and US relations, I want to watch this one if it does go live. It's just every Chinese IPO at this point that does squeak through is a little bit of is a barometer on what the bigger situation and the dialogue between the two countries is. So,
all right, Matt Hammond runs IPO Warriors. The link is on the screen, IPOwarriors.com. You can go there, subscribe to his newsletter. He joins us every Monday to preview all the comings and goings in IPO land and recap the prior week.
I'll be sending out a newsletter probably tomorrow because I want to see how things shake out a little bit today on the calendar, but I'll be recapping and adding any new ones to the newsletter that goes out tomorrow. So go to IPOwarriors.com, like Spencer said, sign up for the newsletter, get the updates when they come.
Very few people I have found that approach IPOs from the perspective of a quick day trade, like Matt often does, and I think there's value there. So thanks a lot, Matt. We'll talk to you again next week. Good luck.
Thank you very much, Spencer. Have a good week.
Right. And real quick on a programming note, and this is the same thing last week as well, YouTube is being really weird for us right now, and it's not letting us redirect you to the next show. So David Green's about to start, if he hasn't already started, but here's what I'm going to do. The link to find David Green is in the description of this video, and I'm also going to spam it in chat right now, okay? There is the link. Oh, that's not it. 1 second. Here is the link to get to live trading with David Green, which is starting right now here on our channel. There it is. It's in chat. Again, it's in the description, or just go to youtube.com/Benzinga to find it, because for whatever reason we're not allowed to redirect you. I don't know why. So there was the link. Okay, find David Green coming up next. That's going to be a wrap for us here this morning. Didn't even mention the infrastructure bill. I know infrastructure stocks are trading higher today, so sorry, kind of missed that one. Please remember, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Thanks to both our guests, Tim and Matt. Thanks to all of you in our chat. Please drop us a like. How many likes are you at right now? We are at how many likes? 411. Can I get to 450? Let's get to 450. That would make my morning. Everyone have a good rest of your morning. Good luck at the open, which is like right now, basically. Go make some money. David Green is live until 11 o'clock. I'll see you a little bit later, and stay green.